So I thought Nancy did a very good job reporting, but to me, I don't see it as infighting at all. I actually think it's healthy debate, and the press, I think, sometimes treats anything that Mr. Trump or President-elect Trump says as catnip. And I think you've got a lot of healthy debates, and so I think the infighting thing is very much overhyped. I could tell you that when I was there, and this was during the pandemic, there wasn't chaos, and that was typically the adjective people use. So I think we have to be a little bit more careful in terms of, I think, how we describe things. But in terms of the people, I mean, the president certainly has a great list of people who could take the role. I think what you're referring to as it relates to Kevin Warsh is a paper position he had back in 2011. The world has totally changed since then. So whether it's Kevin Warsh or Scott Bessent, in complementary roles, I think the nation would be well served. But I think the point is that the president-elect is making a very thorough, thoughtful decision on who he wants, and we have to applaud the fact that he's moving with patience and thinking about it.
Joe, thank you for that. Considering all the motion here and the commotion and the reporting that you may or may not think is totally accurate, at least describing the mood at Mar-a-Lago. You've been there. You know what this is like. You were chief economist, National Economic Council. Are you loving sitting back here watching what's going on from your perch, or are you actually in conversation with the transition team about taking on another role in this new White House?
No, I'm lucky that I get to be an outside observer and have some insight into Washington. And most importantly, the markets are moving, and it's making my day job more fun and interesting. It's great already, but we're making it great again. Poor pun, but you know what I mean. But no, it's pretty interesting in terms of what happens. And I do think, the people that the president is considering for Treasury, I think what's important is they're not folks that I think would be market negative by any means. And the president needs to put someone there who can articulate his policies, be a spokesperson for the markets, and do it in a way that inspires confidence. And I think what you're seeing now with equities close to their all-time highs, and the market and Treasury market, basically not selling off further, I think right now is a vote of confidence that whoever the president picks will be someone that investors are largely comfortable with.
Well, as we consider the markets here and the public companies that trade on them, Joe, we did get some news from the CFO of Walmart, who told CNBC today that if Donald Trump implements the tariffs as expected, Walmart will likely have to raise some prices. I know we've discussed this with you at length, but this points to the inflationary concerns many have. Yes. Joe, and I wonder how many price increases you would expect to see.
So I think what's very important is, again, as I said this, maybe there's 5 pillars of Trumponomics. One of them certainly is the tariffs, but also part of that is lower energy costs. And the energy share of the economy is larger than the imported goods share of the economy. And energy, if prices are down, has a more multiplicative effect in that it impacts other goods and prices, and lower costs actually can reduce the inflation rate. A tariff, theoretically, would be a one-off increase in the price level, so it's not inflationary. Moreover, what we saw from basically the 2017 to 2020 period is that producers largely, if not fully, absorbed that price increase. So to sound a bit like an economist, it depends on implementation. But I think people who are fixated on the tariffs as being inflationary and hurting, I think are missing the bigger picture and what the president-elect is trying to do, because it also involves deregulation, which is growth enhancing, lower tax rates on the corporate sector, and the intention is to increase productive capacity and supply, which lifts productivity and actually would lower inflation. So I don't like when people just fixate on one little narrow piece and don't look at the possible effects, the second and third order effects that tariffs may have that actually are not destabilizing or inflationary really in any appreciable way.
I'd like to ask you about Donald Trump's pick for Energy Secretary Chris Wright, said to be an innovator when it comes to fracking. This is drill, baby, drill, right? Assuming he's confirmed, Joe, what will it mean for oil prices in, say, the first year of Donald Trump's administration? Because the president-elect has made some big promises to lower energy prices by half.
Yeah, I mean, the thing is, we're going to get lower energy costs. I don't know where prices go. A lot will depend in part on the global economy and what the president decides to do with Iran and sanctions. So it's not just a U.S. phenomenon. But I do think there is going to be a very concerted effort to get energy production higher, to get gasoline prices back. I believe they average only around $2.50 a gallon under President Trump's first term. So if you can get prices down at the pump, that's savings that immediately go into middle and lower class pocketbooks, and people appreciate because, again, they could spend money on other goods and services. So energy costs are likely to fall. Where they go, I'm not sure at this point, but yes, you're correct. The drill mantra will be a day one initiative, and you'll see President Trump, through executive order, increase leasing and use of federal lands, exploration, offshore drilling. All those things will come back into the fold.
Well, we also expect that the president-elect, pretty soon after taking office, could use his executive order powers to address the border and migration. He confirmed yesterday reports that he'd look to use the military to enact the mass deportations or get those underway that he said he would on the campaign trail. How quickly do you think that would start to resonate in economic data, Joe?
I don't think that immigration actually has had as big an effect on the economy as people think. It's not as if the people who are coming over illegally are answering a government questionnaire as to whether they're working. And I'd argue that the president's potential policies already have worked to slow foot traffic. And of course, border security implementation will be much stricter. So you'll see the crossings come down. What happens beyond that, I can't say. But I don't think this notion somehow we're going to get this leftward shift in the labor supply curve and of all this inflation, I think, is very misleading. You saw under Trump's first term, you saw immigration and border crossings fall to a de minimis level, and yet you had very little inflation. You still had very good real wage growth. So I don't think this is going to be a factor impacting the larger economy or the labor market in particular.